Good day, guys. Hope you had an awesome Thursday. So today's Friday. We're moving into the weekend, and it's a real positive weekend because it's always nice to have weekend. But from a pure Bitcoin price angle, I think it is not feeling so great. So what is happening at the moment? So we're filling the CME gap for Bitcoin. It lives between 113 and 116.6 on this chart. So I've got a couple of questions that I want to try and answer today for you guys. First thing is, what is a CME gap? What happens when it gets filled? And then if it falls through, because if we zoom in on these charts, let me get you a CME gap chart that's a little more zoomed in. If we zoom in on these charts, you'll find that, sometimes it creates a CME gap, fills it, and then goes lower. Creates a CME gap, fills it, and goes lower. So what would be the critical supports for these CME gaps? And then lastly, we've been looking at alts. There's a couple of alts been going. Solana, Cardano, I've shared a lot of these alts. What's going to happen with them? Okay, so if it all tickles your fancy, something you find interesting, or something you need to know about, you know what to do. Hit the like, hit the subscribe. Help the algorithms know what I am doing for you guys, or whether it is valuable. Arune, good morning as always. Let's see what else is joining in live. It's about 66 people. Normally on dump days, people tend to just avoid the bad news. Good morning, Faisal. No. I'm going to destroy your name, but good morning to you in any case. And thanks for joining in live. Nice to have you here. Okay, so let's start off with the first thing. What is a CME gap? Okay, so the CME chart, let me just load my CME chart. The Chicago Mercantile Exchange gap. That's basically what the CME stands for. And in short, they're trading Monday to Friday. That's all. And then when a weekend happens, if price moves very fast over weekend, say we have a weekend pump, that creates an area where this exchange has not been able to participate in the move of the market. Now it's big liquidity on this. And this means that from a pure statistical point of view, the market tends to fall back and fill these gaps. So if we zoom out and we look at areas where you get the CME on the weekend, price goes and fills it. Okay, CME, price goes and fills it. So it's an easy way to argue that price does have manipulation to it, and that there's always going to be a manipulation or a manipulative move from this. Now, statistically, this is where it becomes really interesting. When these CME gaps gets created, about 95% of them gets filled on the first day. So if we have a CME gap on, say, a Friday, on the Friday, come Monday, the gap tends to get filled quickly and we move on. And in some cases, about 30% of the remaining gaps gets filled within the first week. And about 98% of all gaps get filled. And that's a really interesting stat. So it raises the question, if Friday we close here and the market decides to dump lower, we will have a new CME gap come Monday, which means it's going to either provide us exit liquidity, or it's going to give us a narrative that price is going to rally towards and then go higher. This version, something like that. So those are all things. Now, I don't have the answer for that. And, so we have to take things level by level. And the main level for us from a large time frame bull market is still going to happen perspective is that as long as we fill this gap and price still stays above 110, we're good. Altcoins, good. Bull market, good. Everything, good. And I will only question myself and that word that I'm saying, it's good, if we fall below that level. Because that's when the strong bearish divergence becomes a bearish signal and not and turns from a bullish signal to a bearish signal. Okay, so that puts the sentiment to ease for the larger time frame. We also have a few other things, just a kind reminder, guys. We know that between Bitcoin halvings, so let me just quickly move the chart so that everything is lined up. Okay, there we go. So between halvings, okay, Halving's the red vertical line. When Bitcoin has a bull market, it happens within the first 38% of the time between the two halvings there. And you can see it did it there as well. And when Bitcoin has a bear market, it retraces from that all-time high to about 68% between the two halving dates. And then from that point onwards, we start rebuilding our next bull cycle. So where we're at right now, we're getting close to our halving top, okay? And statistically, that 38 is only in October, the end of this year. So after October, if we start falling through levels, I will definitely be a lot more cautious. But for now, I'm going to treat the trend as if it's going to last forever and say that I'll give the retrace the benefit of the doubt. Now, it's the second day of the month, and the monthly overlap is a healthy thing. So just to put it in context, there we close the month. Okay, the new month opened. There's a little overlap before we continue. So if that is the case, let me just take the dominance away. The month closed, excuse my bad tenses. Now we're doing an overlap before we continue on higher. Okay, that's it. That's all that I'm looking at right now. So I'm not panicked. I'm not scared. I'm not at any stage saying that it's over. This is healthy retrace for me. So that's the macro sentiment out of the way. Okay. Now, the trader sentiment, completely different. As a trader, I'm bearish AF. Okay, why? I shared this setup with you guys, and this was where we were the last time. I said, okay, we've had a nice impulse. We have a correction. So if the impulse takes X amount of time, the correction will take half of that time to form. And at that stage, we will hold on to demand and we would potentially create another 5-wave impulse. So we're trying to be bullish. We're in a bull market. Bitcoin is pushing all-time highs. It's a fair assumption to try and trade that. At this stage, what we did have, we had the market slow down, and then we had the market create a correction. And the argument was that this was, we're trying to make a higher high, and from that point onwards, we want to see the market move on. Now, it changed, and all this is shared in the Discord, guys, so you can go and join the Discord. It's free, okay? Links in the video description. So it changed. What changed? So if you look at this, 2 days ago, I said, if we fall below the axis from the chart, that's bad because we've been grinding sideways. Then we can start thinking that 114K becomes a reality, okay? Subsequently, that's what I've been doing. I've been shorting Bitcoin because we started to fall below those ranges, and we've been trading bearish on the Discord, okay? And to take things where we're at right now, okay, below the axis, we're moving bearish. We're very close to what would potentially be the range where demand kicks in. So right now is a really good time to be bullish, but be careful. Don't, from a trader, try and catch a falling knife because you're using leverage. It can really hurt you if you're wrong because there's low liquidity. Why is it easy for the market to be manipulated at these lows and at these highs? Simple. There's very low liquidity at that stage. People are either too scared to buy bull and too scared to short, so it's easy to turn that around. And now it is too scared to buy the dip, and everybody potentially wants to try and wait for a retrace to short. So at this stage, the market's going to get to that point where the liquidity is very low. Now, how can I prove this? Very simple. I'm just going to go to a clean BTC chart. Clean one, okay? And let's clean it up even more. Clean BTC chart. And from the indicators, I'm just going to load the visible range volume profile. And I'm just going to switch off the lines, POC lines, and all those stuff. And if you look at this consolidation, where was the most amount of trading? At the middle, at the midpoint, where the axis was. So these highs has not seen a lot of volume, and these lows has not seen a lot of volume. That's it. That is why it's so easy to get manipulated. So why do I say don't then buy now? Well, simple. Because the market is so volatile, we could easily see a stop run and it creates a crazy little wick and then comes right back. So you want to wait for the market on a lower time frame to just test the range. Wait for this, wait for a high, and then when it tests, let me just make that bigger. When it tests the area and stays above the wick, that's what you want to try and use to get it. So we've created the wick. We've not created any high. So we haven't shown any signs that it's over. Once we do have a blue candle and we come back to this area, use that as your buy, because then at least you know you've got an invalidation. Because if this is the low, like that case, it won't put in a lower low. Lower lows cannot see price go up. Then it's as simple as that. Then it won't go to 116 or any of the other areas. It's as simple as that. Okay. So now you've got my trader sentiment as well. So trader in me from the 4 hour said, okay, maybe we've got this wrong. This is definitely now failed. Let's delete that. Let's delete that. If there's any losses or any stops, forgive yourself, because in the end of the day, you know, trading has no guarantee. We're trading in potential, in possibilities, okay, and in probabilities. That's rather the better word. And the probability was that this was the play, we were wrong. So what's the next probability? Means that this correction isn't done. So maybe the labeling of the correction wasn't done correctly, okay, meaning that this is a 1, 2, 3, A and B, and we still need to create a C instead of this being the A, the B, and this being the C, whatever the case might be. I tend to not dwell too much on this because I know that corrections will happen, and inevitably we will have, let's make the RSI a little bit bigger, we'll have hidden bullish divergence. Price is below the 2. We just don't have strong bullish divergence yet for this 4 hour to move. Doesn't necessarily always have to be there on the 4 hour. You can pick it up on smaller time frames. Hence the fact that we got a nice push there. But for now, that's what we have. We don't have anything there other than the hidden bullish divergence. So we can dream that there's going to be a rally. We just need to be sitting on our hands patiently waiting for the bottom signals to form before we grab the rally or try and buy the dip. That's it. Okay. So you've got the sentiment. You've got a little bit of a what to do. Remember, this is not financial advice, guys. I'm sharing what I'm seeing. I'm basically just trying to arm you with as much information as possible so that you can move through the market and not feel helpless, especially if you're new to trading. Okay. So that's it. So let's see. Good morning, Stanku, Lizel, Oliver from Thailand. It has a retest 100 anyways. Okay. So maybe it does. Remember when I said from the macro point of view, you know, if we look at this from a macro view, let's do this. Let's go to my weekly time frame chart. We've been in the sell zone from a weekly point of view now for 3-4 weeks. So a test at 110, a test at 1.5 from a weekly point of view is still fair. Okay. But as long as we stay above this weekly and the daily levels, there's nothing bearish just yet. So your way of looking at it, yes, and it needs to maybe go to these levels. It's fair to say that, okay? But be mindful that you don't put yourself into hot water so that when we do fail, because it's eventually going to do, we all know no bull market lasts forever. It's eventually going to happen that you have an exit plan, and that's why I always take profit on strength. Okay. So there you have it. Good morning, Mr. Complicated Simpleton. Nice to have you here. So we now know what the CME gap is. We know the statistics around the CME gap. Okay. We know that 95% of them, or 90% of them get filled on the next Monday. And if it doesn't happen, 30% of those gaps get filled within the next first or that specific week. And 98% of all gaps get filled eventually. So there's very few scenarios where there's a weekend gap. Remember now, a weekend gap, not a day trading gap, a weekend gap. that gets created, that doesn't get filled. Okay. And now over to the alts. I think it's now time. So let me quickly see if there's any requests. If there's anything, type them in, depending on where you're watching. If you're watching on Twitter, if you're watching on YouTube, let me know if there's any alt that maybe needs a little bit of your attention, or my attention. And I'm going to quickly then talk through the big ones that I have my eyes on. So here's Ethereum for you guys. So the Ethereum scenario, let's maybe make the RSI a little smaller. There's a lot of drawing here, but it's a nice visual note of where we're at. Okay. So Ethereum, the play was, and the hope was, we were going to push on and still make that higher high. Get that weekly higher high. That's important. Failed. Okay. We have not made a lower low just yet. So Ethereum could still surprise us. And this could still be a buy zone. Okay. Now, what I'm going to do is I'm just going to delete this so that it's a little cleaner and clearer so you guys can see. What do we have here? We've got yet again another strong bearish divergence. I mean, I marked it out on the RSI. I'm just going to mark it out on the candles as well. So there you can see it. Let's maybe take the notes away from the RSI. That will at least make it a little bit more visible for you guys. Come on. There we go. Delete that. Okay, so now you have that. Right. Then we fell below, or we've been hovering around that pivot, traded below it, and now we're basically below that level. So we've got this pivot as support, and then we've got this pivot as support. If we make a lower low, and this is the key now with Ethereum, this is a demand zone. If we make a lower low, we're falling below the bullish long-term axis, just like we did with Bitcoin on the 4-hour descending channel that we had. This one here, that axis, that yellow line. If we do this, if we fall below that level, 3,500, we open the door then for deeper retrace to 3,000. Be careful. Okay. So there's no guarantees in it. So you need to manage your risk. Simple as that. And if that is the case, we will see price go lower still. And the fact that we have hidden bullish divergence would still be intact. That RSI goes even lower. It's just more hidden bullish divergence until price falls below $2,400. So there's a lot of room for retrace for Ethereum. So just be mindful. So have a clear line. So, well, we cannot start trading below the axis, meaning open and closing 4-hour candles below that level, because then it is bad. A wick to that level is not bad. It's buying a demand zone with hidden bullish divergence. It's actually a really good buy setup. Okay, that's it. So that would be my initial area to try and get to the next leg to the upside, giving the current trend the benefit of the doubt on the basis that Bitcoin is going to rally here. But if Bitcoin falls below, chances are really good ETH is going to fall a little bit deeper. Just be prepared for that. Okay. Next coin, Solana. Let's have a look at Solana real quick. So Solana, same thing now. You know, we were looking for that higher high of the rally. We didn't get it. So this is this. So Solana is still bullish. Where is the invalidation for the bullish? There. We've got hidden bullish divergence. We're still within our demand supply ray. Okay, so all is well, but as soon as we start moving into or below 155, we're invalidating this channel. And you can almost say you don't need to then try and buy a dip that's sitting around there, because then you're not going to see a higher high. So you've got a very flushed out Solana already. Can't go that much lower. So keep an eye on this one. Okay, anything between 160 from where it's at and 160 would probably be a really good area to hunt for along. Okay, you have all the tools to hunt for along. Simple. If you want to support the content, get a Bybit account. Okay, if you have a Bybit account, you can, and it's not with my partner link. What you can do is you can actually just scroll down into the community sector, click on partners, click on Bybit. Okay. And there's a little button that tells you how to transfer your KYC. It's a Bybit link. It takes you to Bybit's website. and shows you how you can just transfer your KYC so you do qualify. Because what will this do? It will give you access to my buddy indicator. Okay. So basically the indicator looks at all the strategies I use. SO1 for strong bullish divergence, SO2 for demand zone buys, SO3s for breakouts, SO4 for hidden bullish divergence, and then SO5, which is just a hybrid of the hidden bullish divergence. So if you click on the buddy indicator and you've loaded it, okay, down there, select your strategy. There's all those strategies. So you can show all, you can hide all. Hide all means that it gives you just a color override. It tells you, listen, time to be bearish. Things are bearish. So from a 176 already, the buddy has been telling you to trade bearish. Simple as that. Okay. So looking at the strategies, let's show all. Trade bearish, so you trade the bearish strategies. Now, the pity, I mean, they gave you an SO2, literally hunt everybody's stops. I always put my stop a little bit higher. That's a 128 or 129 risk to reward ratio trade. So that short would given you, if you risked $100 there, you would have been up $900 by now, just by that one setup. Everything is orange. So what do? You don't trade the bullish trades because you don't want to trade against the predominant trend. Okay, this is now 15-minute bearish. If you take this to a 30-minute time frame, if that's your preferred time frame, then it would give you the setups based on those levels. There's bullish setups. Ignore them because it's clearly been from 180 been bearish, and at this stage it's not had enough retrace to give you a setup as of that. Okay, if you take smaller time frames, it will be a lot more choppier. I would suggest not to go below an 8-minute time frame. Just me and you, I find that that's as small the zoom could be. Otherwise, it really becomes, just too choppy. Okay, the performance of the indicator is simple. 65% of its trades play out in your favor. They gave you an SO2 and hidden bearish divergence. Both of them now has hit TP. And there's the SO5, which you will only see if you select that for reasons because the tag will overlap. So, it's now hidden. Sorry, guys. But in any case, there it is. And all of them has now hit TP. So in there on the 8-minute, it's really doing well. 10-minute, it does really well as well. There you would have just missed the entry. So sometimes the time frames is a critical thing to this, but there you have it. Okay. It's as simple as that. Support the content, back the channel that backs you, and the indicator is yours. Okay. Simple. Right. There you have it. Okay. Let's quickly have a look at more coins because I said I'm going to go through the top. So this was now Solana. So I'll leave the indicator for you guys to play with, and then I'll do a little bit more of my chart arting on these coins for you guys. So now we've got Cardano. So we did Solana, we've got Cardano. Yet again, from this, we're in the hidden bullish divergence zone. This is where I want to go long. So we're doing exactly what I want to do. This is my buy the dip zone. But I understand that my invalidation lives very low. So I can't just blindly leverage the shit out of this thing on 70 cents and then hold for 50 cents. You'll get wrecked by that time. Okay? So wait for this move to give you strong bullish divergence, which means we'll make a lower low. The RSI would start trending up. Or alternatively, wait for the indicator to give you that. It's already giving you strong bullish divergence, but we've not reclaimed any pivots, anything just yet. So this is now on the smaller time. This is now on the 15-minute. Okay, won't trade it because the color is orange. Okay, wait for that to happen. Once it's there and you've reclaimed the pivot, you know the rule with the pivot, then this thing will start turning blue, and then you can start trading that as well. Okay, simple as that. So there's Cardano. So we're sitting in the situation where it's turning into a buy zone, but we need to understand that there's a lot of room for pain before it moves. Okay. Let's have a look at XRP. Now this thing is a beast. It really performed exceptionally well. So Great success comes with great retrace. Okay, so it's doing the same thing. So we were hoping that this is where it's over, but it's not, clearly not over. We're going to now move into these areas, okay, where the major support lives. And we're going to then build a base there, have divergence as well, use the buddy indicator, and then from that time move on. What do we have? This was the axis. This one looks a little bit different. This is the axis. We got above it. We fell below it, which is a danger sign. From that point onwards, we are now going back to demand. We're trying to build more demand. If it holds, great. We're going to move up. We're going to go visit these highs again, and it all is going to be well. If demand is lost, guys, don't stick around. Don't hold a sinking ship, because then we're going to fall back and test these lows, and then it's just going to be bad. Okay, that's simple as that. Right. Then what else did I say we're going to have a look at? Let's see. Solana, Cardano, we've looked at Ethereum, we've looked at XRP, BNB. Probably the only coin, and I said from memory, the only one that I know of that made a new all-time high from the previous bull market. Ethan did it, Solana didn't do it. BNB did it, but where is it at? Strong bearish divergence. Statistically, that's where it occurs. Everything is okay. It's not necessarily bearish until we fall below the pivot. So maybe this is just an opportunity for this thing to consolidate in around this area before there's more. I don't want to dream like, I don't want to do this. I don't want to doomsday anything just yet, guys, because we're not there. We're not at doomsday levels. We're just retracing at this stage from a macro point of view, micro point of view. Things are bearish. That's it. But it's not bear market bearish. Okay, there you have it. Over to your requests. Now, I had a couple of coins being asked yesterday from me, and I will do one or two from those. So yesterday we looked at INJ. Okay, so I'm going to hit this onto the 4-hour time frame. And this was basically the analysis for this. So, okay. The trend is still bullish. Support lives at $10, okay? And consider buying at the demand line test. So we're literally almost there, okay? DCA at these lows, okay? With a clear invalidation, if we fall below $10, shit's bad. It's going to be like Celestia. You know what happened to Celestia? It fell to the floor, okay? What we don't want to see is lower lows. Now, we are making lower lows, though, but we haven't closed lower low just yet. Okay, so it is a little bit of a, let's just say, almost like a contradiction. I'm saying buy there, but you need to make a lower low to buy there. But what I mean by that is if you look at the waves, okay, this is all part of a complex set of waves to try and get us there. Invalidation is there. Don't want to see a lower low. That's ultimately bad. Okay, so there you have INJ. Okay, another one that we did yesterday was, let's quickly have a look. There was PENGU. We looked at some meme coins. Okay, so the argument simple. When you have something that on a launch goes, so I'm going to do this and just expand this image. This is SUI launch. The launch wick now in this, on this exchange, the timing is different. It closed there, but all the other exchanges it closed there. Okay, I don't know why, but okay, that's just the nature. We go to the 50% level, then we go and test the demand zone at the bottom before we go moon. You know where SUI is right now? It's like $4. Okay, $3.50 probably. So that is the case study for the argument that I want to make here. And there's more. There's HBAR, did exactly the same. I'll make it a little bit bigger for you guys. You can see launch wick, consolidated, went there, went back to that demand, then moon. Okay. And so if that is the case, what do we have here? We had our launch. We can argue that maybe that was the first time, but it's just too quick. Okay. We had our launch. We're now in that 50% zone. We're holding our bullish momentum, so it's buy the dip as long as we stay above this demand rate. Okay. You want to know how this line works and where to find it? Simple. Click on the Fibonacci tools. Go to your trend fib extension of your speed resistance fan. And this line you can create by having everything off and click on the 38.2. And then you track it. Simple. Let me delete this. There's our first oversold to overbought wave. Okay, whoops. Then we made a correction, and now we have a continuation. So, you know, you don't need a lot of skill to just say, well, that's something like this probably. Okay. And you wait for the first low to the high to occur. So you put it on that first low. You can use the RSI. It's an easy way to make it happen. Oops. And then when you have that second low in that doesn't go lower, now you start tracking it with the highs. And as long as we stay above that line, you're okay. So where we're at now, you're okay. That's one dynamic of tracking momentum. Tracking support is simple. I'm going to go to the daily time frame. When you have strong bearish divergence, you will have pivots being created. Now, I just want to go daily because it's just cleaner at this stage. This is where the last pivot got created. Okay. RSI, higher high in price, lower high on the RSI. So it's simple. As long as we stay above that and above the momentum, there is a dream for more. If Bitcoin fails where it's at, yet again, this will probably fail, and then the retrace will happen. There's going to be more pain. Then you're going to sit on your hands for a couple of weeks. But for now, it's that healthy, let's see if it bounces kind of environment for PENGU. Okay, hope that helps. Right, over to some of the requests. Let's see what we have. CME gap closed. Now, I always say with the CME, let's maybe just finish up on that. A tricky thing with the CME gap is, look at where we're at right now, okay? CME gap. Do we have to fold the entire thing? No, not necessarily. This could have almost counted as a CME gap fill as well. It doesn't have to fold the entire thing, okay? There's no how deep it needs to go. Treat the CME gap as a zone, and anywhere within that zone is still there. And which means if you bought any of these CME retraces, your stop needs to be below that range. Okay, simple as that. Okay, let's quickly have a look. So we did XRP, Luis. So you should be sorted, and don't be drowning, my friend. You now know what needs to happen there. Let's see. Oh, don't close this. Let's do this. Oh, yeah, and then look, while this pops up, guys, just remember, we've got some banking holidays coming this weekend. Not major banking holidays, but it's going to suck liquidity out of the market, okay? And then from the US point of view, we've got the unemployment and those things, which is all going to impact the FOMC decision, whether the rates are going to change in September. So these things will bring volatility. So just keep an eye on those, okay? Let's quickly see. Let's have a look at TON. I haven't looked at TON forever. Deepen, okay? So where did I hide my own TON? Before we look at TON, sorry, before we do that, hot tip, okay? We had a nice run with Newt. Okay? Shared this with you guys. I explained to you guys, get in. 50% of the wick, get your asses out. I sold a little bit earlier, okay, but there it is. Nevertheless, 50% of the wick, get your asses out. All right, this is where I sold. So I was happy. I'm not greedy. I'm not a greedy. And now what are we doing? We're testing the demand. So building a new base. So if there's going to be more, this is the lows. Hot tip. I'll leave it with you. Okay. And then obviously another hot tip. Keep an eye on Uni. Uni's going to do some big stuff. Okay. Now let's have a look at TON. So I'm just going to type it in. This is not TON on OKX. Let me just use TON on Bybit. 1, 2, 3. There you go. Right. First we do is we always look at this thing from a weekly point of view. I just want to get the feel of this. Okay, so one can argue first pump, range lows. So what needs to happen for TON? It's so simple from a weekly point of view. It's bullish. Okay. but it has to remain above these levels. Okay, so this is your support range. So you've got $1 leeway on the weekly time frame, which is crazy. It's a lot of leeway for this, but that's the structure. Altcoin is like a leveraged coin. They're crazy. Okay, what do we have? We've made double tops here, so this is definitely an area where there is a lot of resistance in price or reluctance to buy. But we do have an imbalance sitting right here. And it's this imbalance that's going to act as a magnet. It's going to suck price into that range. So an example of a coin that will fill that imbalance. I was looking at one this morning. Which one was that? Come on. Now my mind was just not. I think it is Link. Okay. There you go. Imbalance. It sucks price into that range. Okay, so back to TON. There's many examples of this. Okay, we can probably look at a few. Let's look at Bitcoin Cash. Okay, there you go. Imbalance there, imbalance there. It sucks price there like a magnet and then retraces. Okay, so when you look at TON, imbalance there. There's no guarantee, and that's the thing, that we're going to go there now. We could chop around like the other ones and do it next month or later the year, or first go lower still and then come there. I don't know. Don't look at this as a like, oh, it's going to at least make me some. It can take its time. It's a destination map, not a road map. Probably the best way to look at this. So we've got the resistance. So if we move this into a smaller time frame, let's just try and speed it up for today's sake. What do we have? We've got a massive imbalance in there. So we need to stay above. Let's just go to closing prices. It's the easiest way to identify support and resistance levels because they will line up most of the time with highs on the RSI where divergence start happening. High, lower, high, lower, high. So now you're getting it. Hey, there's strong bearish divergence. There's a lot of resistance that's there. Now we're above it. So what does this mean for us? It needs to be support now. Okay, so switch back to a candle. It is bouncing as a buy for this. Whether it's going to play out, it's a big question, but that's the risk you're going to take. So hold for this. But if we're below this area, we're going to look for support. That's where support lives. So now you're at that 50-50 line where you need to decide how the risk is there for you, how the risk appetite is for you regarding this. Are you deeply underwater, leveraged? What is the story? I don't know, but this will all be areas where the price would potentially have a little bit of a picnic. Okay, it will get there. Let me just get the right tool. It will probably get there, come back, get there, come back, that kind of thing, So be open to it. Hope that sorts you out on TON. Let's do one more. I see Ondo. Let's see what else. ICP. Sui. Sui is a big deal. Let's maybe do Sui. Emery. Let's have a look at Sui. Where did I hide my Sui for myself? There we go. Okay. So Sui. I was talking about TON imbalances. Look at what Sui did, okay? So here we're at with Sui as well. So what did we have? Same rule as always, strong bearish divergence. So I'm just going to plonk that line down there. Just mark it out as the pivot, okay? Switch to this so you can just see what I mean by this. RSI, make a higher high, then make another higher high, then fall below that level. So that's the high I want to look at, okay? Because now we're trending. And now what do? We made yet another high, wave on wave divergence. So that and that is where the strong bearish divergence lives. Okay, great. Now what needs to happen is price needs to stay above this level or else it's bad. Now we're making lower lows. So it is trending down as a 4-hour. But we're in a situation where this is potentially, let's see, it's probably there. Wave 1, wave 2, wave 3. No, that's not 3. Let me just delete this. Wave 1, 2, wave 3, 4. Maybe that's 5. Okay. Which means that this could be all just another 1, 2, 3, 4, 5, on the way back up. And when you have this, from these lows to these lows, you'll have hidden bearish divergence, meaning the RSI is already going below that area. There's a lot of room for retrace. So you just don't want it to lose critical demand. So support areas for this needs to be here. So let's mark them out. There, there. This is where support needs to be. Fall below those areas, because it's in there. Fall below it, it is then going to start turning bad. Why? Okay, let's take away the Elliott wave. Let's take away the squibbles. And I'm going to leave you guys with this. The supply and demand rate, because it's the most important thing that you need to have when you want to be looking at the market. And I'm going to use this section to draw it, just to give you guys an idea how powerful this is. Okay, so this is where we were trending bearish. Okay, this is where things changed. Now, a supply and a demand rate is on the basis that when price gets manipulated to the upside strongly, okay, we will see that price will go through big blue candles, simple as that. And we'll typically have highs and lows on the RSI. So looking at these highs here and the fact that we threw that range, this would typically be a supply zone. So let's select a line or for now an axis, because we're just trying to find the angle of the market, which means as soon as you start moving this to areas where there was lows, okay, massive lows, and you look into the future, there should be confluence around these ranges, okay? Areas of lows should give you confluence into the future. Right, now if that is not the case, so you draw it and it's not quite there, then you adjust it until it gives you exactly the right picture that you want to see. So maybe this one just needs to be skewed up a little bit more, because we're still not quite hitting all the demand and all the hidden demand zones. So maybe that's the angle. Now, if I move that up again, I want to look at these lows, see if we've got confluence. Okay, it's looking way better now. It's looking way better now. Now, I know this is at this stage where somebody would say, if you put enough lines on the screen, you're always going to find something. And you will be really correct in doing just that. But what we're trying to do is we're just trying to define where the demand lives, okay, and where the supply lives. So if this is where supply then lives, okay, see what I mean by that. Divergence occurs within that range. And this is where demand lives, okay. This is typically then when you need to start worrying, when you fall below the axis and price loses demand. Now, if I take these lines over, I'm going to just I'll duplicate the RSI. And we start looking at where we're at now. Ghana is very simple. It's not going to change. The way the market's going to move for SUI will always now be at this angle. Always. So it's simple now. I've drawn it there. I can always reuse that line. Okay. Look at these lows. Apply my supply zone. There you have it. Okay. Divergence. See how the market is always a rhyme. It never repeats. It's a rhyme. So where we're at now, we've lost demand. Shit. Okay. So then you draw the same thing like we did there, but now you draw it for the bearish side. Okay. So now we're looking for an axis. Drew the wrong one there. Sorry, guys. How much time? 44 minutes. I need to end off. Otherwise, I'm not gonna get any views. The stream is getting too long. Okay. So let's quickly have a look. Are we going through big candles? Yes, we're going through big candles. Is this then lining up with supply? No. So we're not right just yet. So let's zoom in a little bit more. Let's see if we can adjust this. Let's use, there's where divergence occurred. And let's line this up, because now you can see there is supply, 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 and we're revolving around that price. Now let's test it, see if it works. It does look a little bit more accurate. So there is where your supply will live. Okay. And then if we bring it to the lows, there should be confluence around it. This is where your demand will live. Okay. So if this is the case, if we go back and I copy this into the past, we should see confluence around these levels again. Okay. There you have it. So the angle at which it moves is correct. Okay. And funny enough, if you zoom up and zoom out, and you can see how there's always going to be, because you've got the demand raise in there, you can start picking up how this thing is working, doing the work for us. Okay, supply. So it's a trend line that you draw, you never have to redraw again. So it works. So what's happening now? If this is the case, this is typically now where retrace is starting to happen. Ish. Okay. This is the area where I would put my supply. This is really weak at the moment because it didn't even test that. Okay, and this is the area where I would argue that now needs to be demand. You cannot lose this range, or else we're going to fall back into these levels. Okay, now if I put back the fib and all the other stuff, I can use this as probable bounce points. And this is the basis for why a Gann box looks like this. Okay, there you have it. Right, guys, thanks so much for the time. A lot more can be unpacked. I do my education and stuff with everybody in the Discord, and you're more than welcome to join that as well. You go to the navigation page. There is links how to join it, and typically I teach everything with videos in the morning. This is the link to this morning's video. Okay, there you have it. Right now, everybody, I think you're armed with enough info so you can sort yourself out. You can have a look at that. We've looked at hype. We've looked at HBAR to an extent. Jason, I really appreciate the comment and the compliment. You have an amazing weekend, guys. Don't let the retrace, force you into making too hasty decisions. Okay, the market is bearish at the moment, but if I'm looking at it on the 15-minute here on my laptop, it is showing signs that it wants to bounce. So let me just make this a 15-minute, because it is trading for a living after all. What do I mean by that? It is creating strong bullish divergence. Great. And as you know, the strategy is built into the body. It's the same as this. Pull there, hit the strat one. We're trying to find a bottom. So statistically, if it wants to, that's the buy, that's the invalidation. And now price has to do the following. Where's the pivot? There is the pivot. Okay. It needs to get above and stay above that level. So it's looking good for maybe a little bit of a relief rally for a later continuation maybe. Okay. That's it, because the trend is still bearish. We first need to make a bullish trend before I will say that it's going to do this, this, and this, and this. Okay, there you have it. Cheers, guys. Chris, the rest of you guys have an awesome weekend. See you back on Monday. Cheers.